Welcome back to Everything Money. We're glad you joined us again, as always. We're talking about Amazon today, and Paul's not here. Rest in pepperonis, Paul. I'm here with Mo on the big board.
Hello
looking
there.
all spy. Now, meanwhile, your biceps and triceps look phenomenal, but have you noticed, baby? I've been working out a little bit.
Your clothes are getting like small.
Anyway, that's not why you're here. You're here to learn the fundamentals. What's going on with Amazon? They got killed. The stock price got killed. It was a rare occurrence.
It was.
That Amazon came out with earnings. They did well and got slight. Tell us about it.
Yeah, so think about where... So we were just coming out of the pandemic. Everybody was using Amazon. Now people are starting to go back to stores, so maybe they're buying a little bit less on Amazon. They're not leaving, but they're buying a little bit less. They projected their revenue. I think the revenue came in, they missed by a couple billion. And I mean, when we're talking about Amazon numbers, maybe it was a couple $100 million. It was very small, relatively speaking. So that's what caused like a $65 drop and a big gap, which I'm going to show you on the charts. And the gap has since filled, like it always does.
Yes.
But that's the reason Amazon got hit so hard. I wouldn't worry about Amazon in the long run.
Yeah, I mean, this is a phenomenal company, folks, as you probably know. I love having conversations with people that say, that darn Jeff Bezos makes too much money, and then a second later they buy on Amazon.
Yep.
Or they're not paying their workers enough, they buy on Amazon. But what we're going to do is we look at the fundamentals, our 8-pillar analysis, which we've been world famous for, Mo. You know this. We're very huge in Latvia, of course. In Australia, they love us because of the 8 pillars.
Down under.
So keep calm and 8-pillar on. The 8 pillars for this company is not good. Our PE is over the past 5 years is rather high. We'd like this around 20. It's 137, Mo. Our 5-year return on invested capital is at 7. They are growing. Obviously, their net income is growing. Shares outstanding. They're selling off. And so if you look at the 8 pillars on the software we're using, this is our software, of course, you can see that
it's just overpriced.
It's just overpriced at the moment.
I mean, if you look at the metrics that are X's, it's just overpriced. That's exactly what Amazon is right now.
We look at the 8 pillars for fundamentals. What do we pay for this? How do we come up with the stock price? We make some assumptions moving forward. We don't know the future, obviously, Mo. We have to make assumptions moving forward. And what are some of the numbers you're plugging into that stock analyzer tool?
So our revenue growth right now, looking at these averages, I put in 20%, 25%, and 30%. 30% is a lot. Can they sustain this over the long term? That's really the question. Share change, they have not historically bought back shares. So I did buying back 0.5%, not changing their shares at all, and then diluting you 1% more. For profit margin, it's pretty consistent across the board, 4, 5, 6. I think that they'll probably stick with that number over a long period of time. Free cash flow as a percentage of revenue, I did the same. Now, PE is where some people are going to probably be complaining. I put it 18, 20, and 22. Current PE is 137.
Yeah.
There's a lot of people that are going to say that the PE they deserve a higher PE, 25, 30. I don't know. I don't like doing that with companies. I'd rather stick around that average of 20 area, just because at what point can Amazon's huge. We're a $1.7 trillion company.
Yeah.
How much more can you grow? That's the question. And how quickly can you do it?
Yeah.
And then for desired annual returns, I put in 12%, 11%, and 10%. And I got these numbers down here.
Yeah, the current stock price is about $3,400.
Yeah.
And as you can see, if you want to make 12% on the low side, if you want to make 12% over the next 7 years, you need to pay about $1,400 for the stock.
And honestly, that's probably $1,400 without me even doing stock analyzer tool and just knowing about the numbers. That's where I would pretty much put the stock. Now, if you think that they can do 30% revenue growth and their share dilution is only going to be 1%, 6% profit margin, 22 PE, and you want a desired return of 10%, you're pretty much in the... I mean, you can buy it now. It's a value play for you.
I mean, Amazon cost $1,400 Christmas of 18, 3 years ago.
Yeah.
This was a $1,400 stock, and it has since... Oh, my God, look at that. It's just gone crazy. So.
Yeah. But they've proven that they've been an extremely consistent company. They're in the likes of Apple and Google. I'm not worried about them in the long run. It's just how much do you want to pay for a company like Amazon?
So what I'd like to do, Mo, is show off your skills in the Bidnass Nation about trading Amazon on a little speedier level. So instead of a long-term hold and keep Amazon for 10 years, I'd like to look at your rules and how they've applied with Amazon over the past year or so. Go ahead.
That's a great idea. I'm going to start with a swing trading chart, and it's a little bit more detailed, but this is what Seth is talking about. So here was that gap that happened, that big drop on earnings. And it basically fell through all of its major moving averages. And when that happened, I was like, oh boy, I don't think Amazon's going to get back through those moving averages anytime soon. Well, I was wrong, because they just kind of coasted sideways for a little while, and then they popped up right through the sweet spot, broke through all of those moving averages, and now they're over all of them. So this comes back to gaps always fill. I don't know when gaps fill. It could take a year. It could take 2 months, like it did with Amazon. But these gaps typically always fill, and it did absolutely do that. So you could have traded it here and ran it up again, engulfing candlestick, ran it up. And this was a very good looking stock to trade in the short term, like Seth was talking about.
So if this looks confusing to you,
sure it is.
It certainly might be. But in essence, we have our two stochastics on the bottom right, our 32% and our 80%.
Yep.
And this is where once the moving averages crossed into the sweet spot, you know that sweet spot. I love that sweet spot, Mo.
Yep, that sweet spot is right here between this top red line and this bottom red line. This is just a smoothing indicator that tells you when you have the highest probability of making money. And between 32 and 80%, like Seth said, that's what gives you the most opportunity to make the most money.
And so did anyone in the bid and ask catch Amazon as it crossed over and got our green engulfing candlesticks?
Yeah, there was a lot of people that actually grabbed this thing and caught this little run right here. Now, it's not as many people as you would think, but it's also a $3,500 stock. So it's a little bit more difficult for people to trade on a regular basis. But there were people that absolutely caught this run and capitalized on it. And I mean, this is a great looking chart, and this is a great example of what a swing trade can be. And a swing trade is a 1 to 5 day trade, 1 to 10 day trade.
So it looks like at the moment we're in the overbought region, but talk about trading Amazon moving forward.
So moving forward, as long as you're in this, with being in this overbought area, so above 80% is the overbought area. And right now, if you just get an engulfing candlestick, you can stay in this. Because remember, overbought doesn't mean exit. Overbought means be a little bit more cautious, maybe put stops in place because this thing can pull back on you. Let's look at a long-term chart
But
real
you're not
quick.
entering anytime soon.
No, I'm not going to be entering, just because once it gets into that overbought area, I always want to buy when I have the highest probability of making the most money. In the overbought area, the run is kind of over. I liken it to the cookie jar. If you are in that overbought area, you are reaching to the bottom of the cookie jar just trying to grab crumbs instead of grabbing the whole cookie, moving through the sweet spot.
Keep going, Mo.
Okay, so this is a long-term chart on Amazon. These are their all-time highs. Here was that gap, and it's moved up. But even with that big move on the long-term side, it's still a downtrend. So going long-term on this, I still want to wait. I want to be patient, get a big influx of volume, let this red line move up, be an uptrend. And I think you're probably not going to get that until you get to the point of all-time highs.
So what I like doing, Mo, is looking back at your rules and applying them to this chart in the past.
How they would have worked.
Yeah, can you show us how, if you would have entered and exited Amazon trading per your rules, what would have happened?
So let's start back here, and this is June of 2020. You got the first time you had the sweet spot reversal and you moved up, and then you just went sideways for a long time. So you could have bought somewhere in here on an engulfing candlestick, had a great move up, got a little bit of a snapback, nothing wrong, and then back here, this is when you drop below. So as soon as you drop below into the sweet spot in the negative direction, that's when you're going to exit your position. That's when I tell you, exit your position. It just coasted sideways for a little while. You can see the trend went down, but the stock price really didn't. Eventually, you could have bought back in around here, sweet spot reversal again, and you had that little climb again. Now, when it dropped back here on earnings, I always say, don't be in a stock during earnings because random things can happen.
Yeah.
You can have the best earnings in the world come out and the stock price falls on you. You can have the worst earnings in the world come out and the stock price goes up on you. It's a total crapshoot.
Yeah.
That's why I don't like being on earnings.
So if this interests you, you can join our Everything Money community. Much like our former Patreon, we are moving to Everything Money. You can now sign up straight from our own webpage, and we save you a ton of hassle. Patreon with the double fees, with the randomness of Patreon, the screwy billing system, that's all gone. Forget Patreon. You can join everythingmoney.com. You can join our different tiers. In the Bid and Ask Nation, currently $77. This goes up every single month, and you can join Mo on a daily basis where you talk to the Bid and Ask on a daily basis. Videos, you update them.
Yep.
If you're too busy to handle all this, you can follow Mo and his guidance, and he'll tell you when to enter, he'll tell you when to exit, and you can follow along. We have tons of people in the Bid and Ask making a lot of money doing this. So.
And guys, I just showed you a very long run that you could have bought on Amazon from June through almost this year. And that's why this is a very overpriced stock. So we would never buy it from a value perspective, but that trading side gives you the opportunity to buy stocks that you wouldn't buy from a value perspective and still make money on.
Yeah, you'll get that community as well. If you join everythingmoney.com, become one of our members, you get a Discord access with over 5,500 members talking about Amazon, talking about the trades, whether it's day trading, swing trading, long-term trades, and of course, value play, long-term value plays. It's all in there. You will love this. It's the best. I was going to say Patreon mode because we keep moving off this, but we quickly made one of the best Patreon pages in the world. But because of their screwy billing, we got off that equally as fast. So join our community. You'll have access to all this. So in the end, Mo, do you envision Amazon being one of your go-to trading companies, or is this is the volatility? Just tell me your general thoughts moving forward with Amazon.
Overall, Amazon is a great company to trade. The only downside that I see to it is that exorbitant price, that like actual physical price.
Yeah.
Like $3,500. That's a lot for somebody to trade. But besides that, it's a great looking stock. It's always a good stock to trade because they get very long trends that you can stay in for a very long time, going long or short.
All right, that's our take. Join the Everything Money community at everythingmoney.com, and you can have these type of discussions. And if this is new to you, we're happy you made it through the video. We will get Paul back as soon as possible so you can fondle his little belly as always. That's our take on Amazon. Thanks for watching. We'll see you next video. And Mo, people love when I throw this mic to the side, so I have to do that. So I'm like,
He gone.
see you guys. Love you.